So I'm here at the Cambridge House show in Palm Springs with Brent Cook. He actually gave me my lesson on mining and grades, and I learned a lot from his presentations in the past, and I'm here. I get to interview him. Brent, thanks for joining me today.
Glad to be here in such a lovely setting.
Awesome. Yeah, it's Palm Springs. We're enjoying the weather and enjoying a little bit of golf myself. But I have a couple questions for you. I want to ask you about the junior mining sector. I know we were talking just a little bit before the interview. And what's going on? Are we seeing a little bit of a cyclical uptrend right now? Or is this the foundation for the potential bottom? And I know it's hard to pick that perfect spot, but you know.
Yeah, I'm not even going to try. What we are seeing is certainly over the past month is a much more interest and volume and such and financings in the junior sector, which has been quite positive. We saw this in 2013 and 2012 as well, where the first of the year there's a lot of excitement in Vancouver and financings that go through, and then things sort of fell apart. I don't know if it's going to happen again this year or not. I think fundamentally there has to be some major changes in this sector in terms of what's financed, what's brought to the public to be financed, what's explored for, and expectations as well. I think expectations in the past have been oversold, and that's sort of what ends up shooting ourselves in the foot as an industry as a whole.
Yeah, I mean, a lot of people have been sold the inflation story, and that's been shoved down a lot of people's throat. And then, here, buy this to protect yourself against inflation, and it hasn't worked out. And I think a lot of those people have been burnt out. And I'm wondering, what will be the catalyst for the next wave of people to say, hey, you know what? There really is value in this sector. And, it's time to get in, whenever that may be, whether it's now in a year, and really just start saying, hey, there really is value now. I mean, the cost is,
Yeah, I think for me, focusing on inflation, deflation, what's going to happen in China, what's going to happen in Spain, Brazil, the Middle East, focusing on things that I've got no actual insights into other than anybody else, is sort of not what's going to kick it off for me. And I think what really has to happen, and I think it will, starting, maybe not this year, but next year, the year after, is a recognition that regardless of what happens globally, we are consuming right now on the order of 85 million ounces of gold a year, 19 million tons of copper a year, and we are not finding that much every year. So what's really going to happen is there's, and I've said this in my newsletter a number of times, is that there's a pinch point coming where I think investors are going to recognize that we are not finding enough metal to supply what we're mining. I think the mining companies are going to wake up to that and go, we don't have any new ore to replace what we're mining. And that to me is really what I think is important to focus on in this sector. Ignore all those things that you don't really know, you can't really understand or predict, at least in my case, and just focus on what is most likely to happen. That is, we're running out of new ore to replace what's being mined. Bottom line.
A lot of people are waiting for the metals prices to turn around and for the junior mining sector to follow. Is it possible to see the junior mining sector take off without the metals prices?
Very selectively. Again, I think what you need to do in this sector right now is find the very few deposits that are economic at these prices, and I mean really economic, and find the people who are capable of finding those deposits in the future. And that narrows your whole list down to maybe 100 on the venture exchange. And then there's going to be 1,300 that are left there who might get lucky. So ignoring that aspect of it, which we can't control, and someone will get lucky. If you can focus on to get it down to 100, and then from in that, select 20 or so, which is what, again, in my letter, what I focus on is 20 companies. I think that's plenty to follow, and just wait it out. I think that's the smart move.
Kind of shifting over into the investment sector and talking about the junior mining companies and speculation, what can someone anticipate to get when they speculate? What are you looking for? Are you looking for something to double, something to triple? I mean, or are you looking for something to really hit it out of the park? And what is someone looking in terms of a timeline when they're trying to invest in these things? I
Well,
know those are tough questions, but
it's extremely variable. I mean, can I mention companies on this interview?
Yeah, I don't mind.
Okay. In our case, we invested in a company called Reservoir Minerals, who made a discovery in Serbia, a major porphyry copper gold system. That stock over the past 2 years has gone from 60 cents to $6. Other stocks we've invested in have gone more advanced, have got a resource defined, and we recognize that this is economic, may go from $1 to $2 with flat metal prices over a year or two. Others, Virginia Mines is one we invested in a long time ago, but it's a good example. This thing more or less flatlined for 5 years plus, doing good work, exploring intelligently, passing off risk so that their share structure stayed tight, and they finally made a discovery. This thing went from 34 cents, was bought out by Gold Corp for the equivalent of $18, and you got a spin out from it, another company that's right now worth $13 again. So those are the sorts of things that hopefully happen. That's what we're really after.
Yeah, I know. A lot of people are tired of, and it's a risky thing to do, and kind of a road you got to go down carefully. But a lot of people are tired of getting rich slow, and I think the junior mining sector is a good place to park, some money you're willing to speculate in. What is your kind of approach for a portfolio strategy? I mean, how do you tell somebody? And without giving them investment advice, I mean, what would you do in your situation if you're the typical person?
Well, I'm not. I would not recommend anyone do what I do, which is I'm probably half in junior companies, another quarter in high dividend stocks, another quarter in cash.
Okay.
So that's not what I would recommend.
Yeah,
but this is what I do.
Yeah.
This is what I do, and I've done really well at it. But that's what I do, and that's because I know the industry, I know the geology, and I'm very, very detailed in my due diligence. I mean, if I know that 90% of the stocks that go up this curve are going to crash, I've made good money on those going up by recognizing early on enough what the fatal flaw is, right? Mm-hmm. And that's what you've got to do to do well in this business. So I think, for someone coming into this, it's real speculative. Consider it money you're gambling with, and I think it's really important to get advice from someone who knows what a mine looks like, what a deposit looks like, and the risks.
It's not gambling at that point. I mean, you're really speculating and putting your money in a place that you have some good understanding with, and being able to make an educated guess. And not even a guess at that point. I mean, you're setting yourself up for the huge upside.
Yeah, and discovery takes time. I mean, it's getting harder and harder to find new deposits. So you've got to let the process play out. It's science, really. It's scientists going out, making observations, testing these theses to see, yes, there's gold down there, or no, there isn't. And if there isn't, why not? And so they're testing these theses, and that's what you're watching.
Yeah. Can you talk about ore grades a little bit? That's kind of, something I learned from you, to a more educated extent, and just talk about what's going on with ore grades and why that's a trend. What that could potentially do to the market.
Yeah, this is interesting. I use a chart in my presentation that shows that over the past 20 years, the average mined grade of a gold deposit has gone down by more than half. And it's continued to go down. The reason is, one, the price went up, so they could mine lower grade, and two, there are more efficient means of mining it. But we've maxed out on that point. That with the collapse in the gold price, or the decline in the gold price, these deposits that used to be economic are no longer economic, and reserves that they used to have on the books, these major mining companies, are no longer economic as well. So we're losing all that. So grade is really important. And people say, grade is king. That's really not true. The idea being that the higher grade deposit, the better the deposit. That's not true at all. It's margin that's king. And I can show you a deposit that grades 0.8 grams per ton and produces gold for $600 an ounce, and I can show you another one that's 30 grams a ton, and they lose money. So it's all about the economics behind pulling the metal out of the rock.
Right. And as far as a trend with the grades dropping and not being able to find it, I mean, that should essentially push the price of gold and silver and these the metal in the ground. The price pressure should go up eventually. I mean, if the supply and collapses.
Yeah, well, I view gold and to some degree silver differently, because certainly with gold, there's no shortage of above ground supply. So really what's going to drive the gold price is increased, mostly investment demand. So you've got to guess on that. But certainly with the other metals, you're exactly right. With the grades going down, costs going up, it's going to shut down a lot of mines, and we're going to have to see increased prices, real prices, or aren't going to have the metal we need, in a global economy to keep advancing. So certainly that's going to happen, and I suspect we're going to see it happen over the next, maybe not this year, but 2 to 3 years, 5 years for sure.
Do you think with stocks hitting new highs, the U.S. broad markets, do you think people will start looking in areas like the junior mining sector, or is it too much of a niche for the mainstream to kind of flood over into? Or are people just going to hold on because there's so much excitement in that area?
I don't think people on the whole really invest anymore. I think they're all just gamblers, jumping,
just putting their money in their 401ks. That's it.
Well, not necessarily them, but certainly institutional investors, the funds and that sort of thing. They are to a large degree just chasing each other around the casino, from one winning table to the next. With when or if they ever end up back at the junior mining table, I don't know. I hope it's within the next 10 years.
Yeah.
But certainly there's a lot of reason for at least the fundamental investors to look at this sector and say, I see the shortage coming, I see the pinch point coming, I see the need for major mining companies to acquire new deposits, so who's got the good deposit?
Right. Well, Brent Cook, if you want to reach out to Brent Cook, he's at explorationinsights.com.
Yeah, explorationinsights.com is my website. I've got a number of free articles available there that kind of go through some of the things we discussed, and I'm always available for to be contacted.